This week, I have Clint Sorenson joining me. Clint is the founder and chief investment officer of Wealth Shield. He is highly educated with an alphabet soup of designations behind his name. He's a husband and a father of a wonderful family, snowboarder, MMA fighter, and all-around good dude. And so my good buddy Clint's going to be jumping on the show with us. There he is.
Hey, Chris. And you oversold me on the MMA fighter. I used to train, but these guys are a lot better than me.
But it sounds so cool.
It sounds cool, but yeah, I don't want people picking me up on the street and try to fight me.
Try to fight you. That's right. That's okay. He trained as an MMA
That's
fighter.
right. That's right. A lot better.
There you go. There you go. But you're an all-around hard-charging guy, man.
Yeah, absolutely.
You sleep like what, 4 hours a night?
Yeah, if that. Depends on the night. So I
Depends
sleep
on the
great.
night.
Yeah, it's quantity. I mean, quality over quantity.
Quality over quantity.
That's right.
All right. So it's because you're so focused on stuff. So this is my fun fact, right? So give me a fun fact. What's the most interesting book you've read this year?
Most interesting book I've read this year was probably Meditations, which I always pour back into, by Marcus Aurelius. So it's obviously a book on Stoicism, but it is incredible. Just a glimpse into history. And so I always tend to get back to that book. But yeah, that's probably it.
That is deep, dude.
Yeah, man.
Meditations by Marcus Aurelius.
Yeah.
Okay. All right.
And
so for everybody who's wondering, Marcus Aurelius was the Caesar at the beginning of the movie Gladiator, not at the end. Right? That's who he's talking to at the beginning of the movie Gladiator. Now, Marcus Aurelius was a real guy in history. He was a Roman Caesar.
Yeah, he was calm, collect, the stoicism. He was a man of the people, and it's interesting because I got turned on to the book by Ryan Holiday, who wrote Ego is the Enemy, some other greats, right, that I really enjoy. And that was how it was on his reading list, and obviously something that he had talked about as he has gone down his stoicism journey and wrote about this a lot. And that's how I got onto it, and I've loved it. So that's been a fantastic read for me.
All right. So I'm going to have to read that and compare it to, say, Ecclesiastes, the philosophy book in the Bible.
Yeah.
So here we go. You ready? Lightning fast rounds.
Let's roll.
Since you're one of the best investment minds I know that can communicate what's in your head in a way people can understand, we're going to warm up with current events, current economics before we move on to market predictions and geopolitics.
Okay.
All right. So here we go. You were fond of saying, if you get the business cycle right, you get the market cycle right. So where are we in the current business cycle?
Yeah, no, that's a great question. And I think that's the most important question, right? And then you won't hear the media asking that question, because then they lose the narrative machine. They don't have anything to argue about or talk about. But that's really, as simple as we should make this, is where are we observing data? Where are we in the business cycle? And the way I look at that is growth accelerating or decelerating? And we can look at leading economic indicators to keep it extremely simple. And then is inflation accelerating or decelerating? And we can look at commodity prices to keep it extremely simple. And what we see is that we're an economy that's still growing above trend, right, in both growth and inflation, but we are in fact slowing. So it's like a car driving 100 miles an hour that's not now driving 80 when you're speaking of inflation, and 50 when you're speaking of growth. So that's precisely where we're at. And so what we classify that at is a slowdown. So you really have four different phases of the business cycle. You have a recovery where growth is moving up, but you're below trend. You have an expansion where growth is moving up, but you're above trend. You have a slowdown where growth is now moving down, but you're above trend. And you have a contraction where growth is moving down and you're below trend. So those four phases, the most obvious phase that we're in currently and have been in for about a month now, is the slowdown phase. So above trend growth, but slowing.
Okay, so it is above the line, so we're positive. It's just slowing down. So what does that tell us about the markets?
Yeah, so it tells us that you want to shift up quality. So if you look historically, And again, this is why I love observing the business cycle, because it really gives us a scientific method approach to markets, right? Because we're observing, asking questions, we formulate hypotheses, we test those hypotheses based on historical information, and then we're able to use that to assess the probabilities of how a portfolio could potentially perform given the environment, right? It's a great way to kind of look at that. And so when we look historically at these different business cycle environments, and we break them into factors. So think of factors as value as a factor. You can apply this across asset classes, but value, size, which would be small cap versus large cap, quality, so higher quality companies, higher quality balance sheets versus lower quality, and then momentum, which would be, the companies that are doing well, continuing to do well from a performance perspective, or, issues, right? If you're thinking about bonds or other issues. And then lastly, low volatility. So things that are lower volatility than, say, the peer group or the environment. So if you break it down into factors and just those factors, what you'll find is that in a slowdown, it's one of the few, there's only 2 regime shifts that have major implications in terms of what factors to rotate to. And when you're in an expansion, size and momentum and value tend to work the best. So at the beginning of the year, as we went from recovery to expansion, you saw those factors really play out. Everybody rotated to value, energy got a boost. You got the move into small caps. When we started rotating into the slowdown, it's a profound difference from a factor exposure. So what started happening is you saw a rotation into high quality. You saw a rotation into low volatility. And so we've seen that over the last 3 to 6 months. For instance, low volatility equities are outperforming high beta equities, so higher risk equities over a 3 and a 6 month period. And we've seen growth now outperform value, back to outperforming value on a 1, 3, and 6 month period. And so you're seeing this, and now high quality is one of the top factor exposures. So that's where you want to be in a slowdown across asset classes. You want to start focusing your exposures into high quality exposures, because when you couple the business cycle with where we are from a valuation perspective, you have a high probability of shocks. And so it makes sense to have quality in the event of a slowdown. So that's really sorry for the long-winded answer, but that's really where you want to be.
For disclosure and citation information, please go to www.soundfsg.com/disclosures.